Start with our next chapter. What is it? Integrated and non-integrated books of accounts. Don't worry, I will reach your expectations. Because just now I have started my class. Therefore, let me complete introduction. I'll be having at the end some 15 to 20 minutes of time. I will reach. I will definitely reach your expectations. Don't worry. So many are disappointed. Your sir is not asking questions. So definitely I'll reach your expectations. Don't worry. So I have my own planning. Integrated and non-integrated books of accounts. So in this chapter, we'll be learning how to maintain books of accounts. Here, books of accounts, you have already learned how to maintain as per financial books or financial accounts. You know how to prepare financial books. Now, similarly, here in cost accounting, we learn how to prepare books as per cost accounting. Related to that concept only, here we are calling it as integrated and non-integrated books of accounts. That means in this chapter, we learn journal entries. At the same time, we'll be learning how to prepare or what ledgers will be opening it and how we will close. All those adjustments will be learned in this particular chapter. Now there are two words. One is integrated, other one is non-integrated. Integrated. That means integrated means what? Combined. Non-integrated means not combined. That is separated. So here the word integrated or non-integrated will arise only when we have more than one type of books. Combined or not combined means we must have what more than one. So here, what type of books do we have it? We can maintain books of accounts as per financial accounts, as per books of accounts as per cost account. So therefore, integration or non-integration is based on combining or not combining both these books of accounts. If financial books and cost books, if they both have been combined and if we are maintaining a single set of accounts, then we call it as integrated books of accounts. Whereas financial books and cost books are being maintained separately. If these both are being maintained separately, then we call it as what? Non-integrated books of accounts. So integration means combined. Non-integrated means not combined. So that is the meaning of integrated and non-integrated. Now here, first we will try to learn about non-integrated books of accounts. First our discussion will be on non-integrated books of accounts. Once we complete with non-integrated books of accounts, we will continue with integrated books of accounts. Now I said that non-integrated means we maintain financial books and cost books separately and hence we call it as non-integrated books of accounts. Now let us see that. While preparing non-integrated, here we are learning entries only relating to what? Cost accounts. Why? Financial accounts entries are also required, books are also required, but you know, because you are learning a separate subject called as financial accounting. There you have learned already. Here our focus will be more on what? Cost accounting. Therefore, before entering into that, let us see, we have different types of accounts. Your total accounts can be classified into how many types? Five types. Three or five? What are different types of accounts? Which one? Financial accounts, cost accounts, I call it as personal accounts, real account, nominal accounts. I have asked you a question that how many different types of accounts we have. We have three types of accounts. I haven't asked you different branches of accounting. You said an answer for the question, different type of question. So this is one of the reason you can say that what to write in examination. This is one of the example. In examination, they ask one thing, you write what you know. So therefore, we have total books of accounts or total ledgers. We can classify into three types: personal accounts, real accounts, and nominal accounts. Stop talking. While we preparing, or when we are trying to prepare cost books, certain accounts will not be opened, or we will not open certain accounts. What are those accounts? Are we will not open personal accounts. No personal account is required as per cost accounting. We will not open real accounts. Exception, we have certain account, that is raw materials, work in progress, and finished goods. We open raw material, work in progress, and finished goods. Other than other real accounts, it is not required as per cost accounting. And we will open all nominal accounts. We will not open personal accounts. We will not open real accounts. We open only three types of real accounts, that is raw material, work in progress, and finished goods. And finally, we will open all nominal accounts. Nominal accounts means it is related to expense related or cost related. Since cost accounting, we require what? All types of costs, and hence we open what? All nominal accounts. Cost accounting doesn't require personal accounts. So this data, this is greater, etc. Have we disclosed anything in cost sheet? No. So therefore, those accounts which are not required, we are not opening, and those which are required, we are opening such ledger accounts. Now, what happens, sir? Since we are not opening certain accounts, for every debit, there will not be equivalent credit. Yes or no? So for every debit, there must be what? Equivalent credit. Double entry system, we must have definitely. But here I am not opening certain accounts, personal accounts and some real accounts. When I am not opening, what happens? This will not be, that will be like incomplete records. So whether single entry is preferable or double entry is preferable, double entry. So therefore, we will not open those accounts, and we should satisfy what? Double entry system. And hence, we will open an account called as GLA account. That is General Ledger Adjustment Account. General Ledger Adjustment Account. Or some people call it as NLA account. Nominal Ledger Adjustment Account. Or some people call it as Cost Ledger Control Account. GLA, that is General Ledger Adjustment Account. NLA, Nominal Ledger Adjustment Account. And Cost or Cost Ledger Control Account or Cost Ledger Adjustment Account. So, why we are opening these accounts? Why we are opening GL account? Forget about other names. Why are opening GL account? To satisfy double entry system. So since we are not opening certain accounts, that is personal accounts and real accounts, for those we should substitute some other accounts such that we should apply with or we should comply with what accounting principles. Hence, we are opening an account called as what? GL account. So by opening GL account, we are satisfying the accounting principle of double entry system. We are satisfying double entry system. Now, finally, you can say what all will be posted in GL account? All personal accounts and real accounts. Put together, we are keeping single account called as what? GLA. That is my conclusion. Understand why we are opening? Because we are not opening certain accounts called as personal and real accounts. Further, we are substituting an account called as GLA account. So why GLA means we should comply with what? Double entry system. For that purpose, we are opening GLA account. So this is first point you should understand. Next. Let us gather certain data for our further understanding. We know element wise classification of cost. What are those? Materials, labor and expenses. These materials we have further classified into direct material and indirect material, direct labor and indirect labor, direct expenses and indirect expenses. All indirect cost put together, we call it as overheads. Other name for indirect cost is overhead. These overheads we have further classified into three types: factory overhead, administration overhead, selling and distribution overhead. So this point you should remember it. And one more point to be remembered, you should remember is cost sheet. I hope everyone can recall cost sheet. Yes or not? Okay. Let us write direct materials consume, direct labor cost, direct expenses. We arrive at a prime cost. Factory overheads plus minus let us add administrative overheads. We arrive at for this we should add minus we arrive at plus we arrive at so this is our cost sheet. So if you remember these points, based on this, we can start passing our journal entries. We can learn about journal entries. So first of all, understand why we have opened what GLA account, because as per cost accounting, those accounts that are required, we are opening it. Those which are not required, we are not required to open it, and hence further we have opened an account called as GLA to satisfy what double entry system. Now, from here onwards, we will be learning our journal entries. Now, try to follow. I'll be opening all ledger accounts. First, I will be reading all ledger accounts, and I'll be taking some numbers or some rough some numbers, and we'll discuss each and every entry. And finally, we'll be trying to close accounts as well as we try to learn about journal entries. So we learn journal entry at the same time. What are accounts or what are the ledger accounts that has to be opened? We open it, and finally we try to close those particular accounts. So that is what we are about to do now. So common accounts that we open here is first we open account called as stores control account. Next we open account called as work in progress control account. Next we open account called as finished goods control account. Next we will be opening an account called as cost of sales control account, costing P&L account, GLA account, wages control account, expenses control account, factory overheads control account, administration overheads control account, selling and distribution overheads control account, and lastly sales account. Okay. Let us leave that. Remember, we have one more account, sales account, that we can write it later. So these are the accounts that we open in order to solve a particular question. So total how many accounts we are opening here? One more I said, one more we have what? Sales. So total of what? 12 accounts. That is 1 dozen of accounts. Just for remembering, that's it. So therefore, a basic question, if everything adjustments have been given, then we'll be opening a total of 12 ledger accounts. First, let us take some random numbers and let us discuss each and every entry. First, let us write some opening balances for raw material, work in progress, and finished goods. Let us write some opening balances. Stores, let us take to balance brought down some 10,000 rupees. Work in progress to balance brought down some 20,000 rupees. Finished goods to balance brought down 30,000 rupees. Some random numbers. And for these, even they'll be giving us a GLA balance by balance brought down some 60,000. So these are the opening balances that they had given us. So why I took 60,000 is nothing but stores, working progress, finished goods. All these three are which balances? Debit balances. Corresponding to it will be GLA. So stores plus work in progress plus finished goods. All these three put together how much amount? 60,000. So these are debit items and these are credit item. So our trial balance will be matched. So these were some opening balance I took. Now, first let's start with the raw materials. Let us start with the materials. Now, raw materials purchased. What is the entry? General financial accounting. What is your entry? Purchase accounted to cash or bank or creditors. So generally, cash means the cash is equal to bank. Generally, okay, cash or bank. If it is of payment made. If it is on credit basis, then we substitute creditors. Now tell me, once the raw material has been bought, we immediately issue to which department? Stores department. First you said we purchase entry, purchase control account, purchase account to what? Cash, for example. Now we transfer it to which department? Stores. So for that stores to purchase. First entry is purchase to cash. Next transfer entry, stores to purchase. Combined entry, stores to cash. So this is the entry that we write. So directly purchase entry will be stores to what? Cash. Stores means raw material only. But here we have already discussed. Cash is which account? Real account. So we will not open real account except raw material, work in progress, finished goods. We have already opened those ledgers also. So instead of cash, we substitute what called as what? GLA. Sir, for example, it is on basis, sir. Then creditors. Now creditors is which account? Personal account. So personal account will be open or not? No. For that also we substitute a word called as GL. So to conclude, whether it is on cash or credit, we substitute a word called as what? GLA. Now tell me, which type of books we are learning? Integrated or non-integrated? Non-integrated. First you must be clear that we are opening only what? Non-integrated books of accounts. In that non-integrated means cost accounts and financial accounts both will be opened separately. Financial accounts, you know how to open it and how to close it, etc. Here we are learning only about what? Cost accounting entries. Now, finally, entry for purchase is what? Stores control account debtor to GLA account. Let us take some 1 lakh rupees. Immediately, respective credit entry in GLA account by stores control account 1 lakh. Now we have learned our first entry. What is it? Raw materials purchase. Entry is source control account debtor to GLA. If you want, you can write entries. ledger accounts you are not required to open, but if you want, whenever I say entry, you can read. So first entry we have learned what? Raw material purchased. Entry is stores control account at to GLA account. You can read that so that it will be useful for your revision. You have in a textbook, but we are learning here in a sequence. So this sequence is easy for your preparation. Next. Don't open accounts. Write only what? Entry. Write entry number 1. What? Raw material purchased. Below that, write entry. Stores control account at to GLA account. So since being first entry, I am waiting. Next entry onwards, what? You write your running costs. Everything is there in your textbook. But here we are learning in a particular sequence. My advice is that write these entries as a running cost. Now, the 1 lakh rupees what we have purchased, is it direct material or indirect material? Direct material or indirect material? It is both. So I have written a single combined word, that is material stores to GLA. That 1 lakh may includes what? Direct material. Or you make one more purchase, that means what? Indirect materials. We said materials. Stores account means that is what? Materials account. So in that material accounts will be having more direct materials plus indirect materials. So therefore, I have made heading in stores control with both direct and indirect materials. Okay. Now finally, in our warehouse, how much worth of stock we have as of now? 1 lakh and 10,000. 10,000 is opening balance and 1 lakh is recent purchase. Total 1 lakh 10,000. Now this raw material we are trying to issue into production. Now we are issuing to what? Production. If we are issuing to production, is it direct material or indirect material? If we are issuing into production, is it direct material or indirect material? Direct material. So for production, I issue what? Direct materials. If it is a indirect material, I call it as what? Overheads. So okay, raw material issued to production means we are using it for what? Production purpose. Therefore, for production, if it is directly related, we call it as what? Direct materials. So from stores, the material will be direct. Let's say 50,000 worth of material has been issued to production. So stores account credits we write something 50,000. Okay, 50,000 we write credit because our stock is getting out. To which account we should transfer? Have I opened an account called as production? Then you can see that based on that you can tell me. If you don't know anything, don't substitute in GLA code. Okay. So now tell me, when we issue into production, raw material becomes what? Work in progress. So therefore, raw material issued for production means from stores it is getting out and it is getting converted into what? Work in progress in production department. So from stores, it should reach towards where? Work in progress. Now entry will be work in progress control account data to stores control account. This is entry for what? Raw material issued to production. That is for that we are writing here. In stores department, I'm writing by work in progress control account. Let me take 50,000. In work in progress to stores control account 50,000. Now finally, what is entry? Work in progress control account to stores control account. First, for understanding, I'm writing credit, and next I'm writing what? Debit. So because that will be better understand, we can understand it better. Okay. So 50,000 is direct material that has been issued to production. We have transferred into work in progress. Now, based on this point, remember any direct cost will be transferred to work in progress account. Any direct cost be transferred to where? Work in progress. For example, transferred what? Direct materials. Raw material issued to production means direct material. Direct you should post in which account? Work in progress. So because work in progress is a part of our production. So therefore, direct to production means we will be transferring it to work in progress. Next. Raw material, listen, raw material issued for factory repairs. In cost sheet, how we have classified it? Raw material issued for factory repairs some 10,000. Now what we have classified it? Factory overhead. So since we are issued for factory repairs, that means what? Direct material or indirect material? Indirect material. Repair is not directly related to production. So therefore, there is an indirect material. And since it is related to factory, we classify it as what? Factory overhead. Now tell me, I am issued, now let us take, I have issued 10,000 worth raw material. Which material? Indirect material. For what? Production repairs. Sorry, factory repairs. Now from stores, 10,000 rupees worth will be deducted and it will be transferred to which account? Because this 10,000 is what? Factory overhead. So therefore now what will be entry? Factory overheads control account that are to source control account. This entry for what? Raw material issued for factory repairs, or you can say simply indirect material issued to production. You can write what? Indirect material issued to production will be entries factory overheads control account that are to stores control account. Let me write in stores control account by factory overheads control account 10,000. In factory overheads to stores control account 10,000. Now tell me what is the entry factory overheads control account data to stores control account. Next, indirect materials issued to office, administrative overheads. Now what should happen? Adjustment. Stock should reduce from what? Stores, and it should be transferred to where? Administration overhead. Now tell me what is entry? Administration overheads control account data to stores control account. So these entry for what? Indirect material issued to office. Indirect material issued to office. Entries administration overhead control account data to stores control account. So I'm writing in stores control account by administration overhead control account some 10,000. In administration overheads to stores control account 10,000. These amounts are some random numbers. I'm taking some random numbers. Next, indirect material issued to sales department. It should transfer from stores to what? Sales department. Therefore, it will be classified as what? Selling and distribution order. Therefore, it will be selling and distribution orders control account to stores control account. Right. That is simply for what? Indirect material issue to sales department. So in stores department, I am writing by selling and distribution overheads control account. Let us take 10,000. In selling and distribution overheads to stores control account 10,000. So till now we have written how many entries? 5 entries. First entry, raw material purchase entry, stores control account data to GLA account. Next, raw material issue to production entry, work in progress control account data to stores control account. Next, raw material issued for factory entry, factory overheads control account data to stores control account. Next, raw material issued to office entry, administration overheads control account data to stores control account. Next, raw material issued to sales department entry, selling and distribution overheads control account data to stores control account. Now what we have passed is that is what we have written in diagram. First, direct materials have been transferred to which account? Work in progress. Indirect materials has been transferred to factory overhead, administration overhead, selling and distribution overheads. So first purchases, stores to GLA, direct material means work in progress to stores, indirect material to factory means factory overheads to stores, office means administration overhead to stores, sales department means selling and distribution overheads to stores. So that means we have covered this part, materials part. If you understood materials part, the same replication is labor and expense. If you understood materials, same will be what? Labor and expense. Let us see that. Now, labor means for that purpose we have opened an account called as what? Wages control account. Now, before that, tell me, in wages control account, we are having direct wages or indirect wages? Both direct wages and indirect wages. Okay. First, wages paid. What will be entry? Wages control account data to GLA account. Now avoid cash and credit like creditors etc. You just avoid. So the final entry will be what? Wages control account data to GLA. That is entry for what? Wages paid. This is our sixth entry. In GLA account by wages control account 1 lakh. Now we have written payment entry. Now this 1 lakh includes what and what? Direct wages and indirect wages. Now direct wages. Work in progress. That is what I said previously. If it is direct, it should be transferred to work in progress. So from wages to we transfer to work in progress. Now entry will be work in progress control account data to wages control. This is entry for what? Direct wages. Right. Work in progress control account data to wages control account. Next, we have written entry for direct wages. Next, indirect wages relate to factory. Where should be transferred? Factory overhead. Now entry will be factory overheads control account data to wages control account. So write that in there. That is entry for what? Indirect wages related to factory. Factory overheads control account data to wages control account. Next, till now what we have written? Labor payment entry we have written. Wages control account data to GLA. Direct labor entries. Work in progress control account data to wages control account. Now coming to indirect labor related to factory entries. Factory overheads control account data to wages control account. Now coming to office. Now tell me indirect wages related to office entries. Administration overheads control account data to wages control account. This entry for what? Indirect wages related to office or wages related to office. Administration overhead control account data to wages control account. Next, last one, indirect wages related to what? Sales. Now entry will be selling and distribution overheads control account data to wages control account. This entry for what? Indirect wages related to sales. Right. Selling and distribution overheads control account data to wages control account. So with this we have completed with how many entries? 10 entries. First set is materials, 5 entries. The same similar set is wages, 5 entries. Now let us once again discuss about wages entries. Wages paid entries. Wages control account data to GLA account. Direct wages. Work in progress control account data to wages control account. Indirect wages related to factory. Factory overheads control account data to wages control account. Next, relate to office. Administration overheads control account data to wages control account. Relate to sales department. So same replication of what? Materials. So same as materials we have completed with labor. Now coming to last part is what? Expenses. So first expenses paid entry. Expenses control account data to GLA account. Write that. Expenses paid, expenses control account data to GLA account. Let me take some 50,000. Now tell me, these expenses includes what and what? Direct expenses and indirect expenses. Now that 50,000, that includes both direct and indirect expense. Direct expenses, we transfer it to work in progress. Now what will be entry? Work in progress control account data to expenses control. Right that. Direct expenses, entry is work in progress control account data to expenses control account. I took some 20,000 rupees. Now, next entry will be indirect expenses related to what? Factory. What is entry? Factory overheads control account data to expenses control account. Write that indirect expense related to factory and write entry. Factory overheads control account data to expenses control account. Next, indirect expenses related to what? Office. What will be entry? Administration overheads control account data to expenses control account. That is entry for what? Indirect expenses related to office. Right that. Indirect expense related to office. Administration overheads control account data to expenses control account. Let me take some 10,000. Next, what will be next entry? Indirect expenses related to sales. What will be entry? Selling and distribution overheads control account data to expenses control account. Right there. Indirect expenses related to sales department. Selling and distribution overheads control account data to expenses control account. Let me take some 10,000. Now we have passed entries for what? Expenses. Direct expense has been transferred to work in progress. Indirect expenses has been transferred to factory, office, and sales. Now with this, we have written total of how many entries? 15 entries. For stores 5 and wages 5 and expenses 5 entries. Total of 15 entries. So if you understood about materials, the same replication is for labor and expenses. Now from here onwards, we'll be having different adjustments, different entries. After passing all these entries, we have passed everything, material entries, labor entries, and overhead. That means all entries have been passed. Because in this diagram, everyone has been ticked. That means that we have indirectly written everything linked to cost sheet. Direct material, direct labor, direct expenses, after administration, selling, and distribution overheads. All these have been written. And hence, we have passed our entries. Now, what we should do is we should start with closing our entries. That is closing our ledgers. Now, while closing, we start closing from ways. From ways, we close till selling and distribution. And once again, we start from stores to GLA. So that is a procedure. First, we try to close ledger account starting from where? Wages. What is there is no entry? Just listen. So wages account, total debit is how much? 1 lakh. Total of credit is how much? 1 lakh. Because wages, whatever have been incurred, that is paid or accrued, that particular year we transfer. There will not be any balances in what? Wages. If it is of raw material, work in progress finished will be having some balance stock. But since various entities are accrued, what it may be, it is outstanding, what it may be, what we should do is that we should transfer to respective accounts. So there will not be any outstanding in where various account. Now coming to expenses, same logic for expense also. Whatever the expenses have been incurred, that will be definitely what? Transferred. There will not be any balances in expenses. So always various account and expense account will be closed. Now coming to factory overheads. Total of debits is 40,000. There are 40,000. So total of debits is 40,000. Now, that is what I said. Listen. They are saying that factory overheads absorbed or factory overheads recovered. Factory absorbed or factory overheads recovered. Now, what will be the entry for factory absorbed or factory overheads recovered? You cannot write by balance carried on, etc. because that should be charged to production. So you should recover from whom? Customer. So therefore, for that we are writing recovery entry. So from factory overheads we are recovering it to or we are charging it to customer. From factory we transfer to which account? When you're writing costing mail account, you're not charging it to customer. So that is what we have learned initially. If we want to charge it to customer, it should form part of cost of production. If it doesn't want to charge it, you should transfer to costing P&L account. So here, factories are required for production or not. If I write total amount to costing mail account, you are not recovering any rupee of factor from customer. That is wrong. No. Once again, GLA is what that is for accounts that have not been opened further. So all GL entries, my point of view, we have posted. There is only one entry that is sales, except that everything have been posted. It will be transferred to work in progress control account. How do we know that work in progress account? Okay. Factory audits, even if you transfer to work in progress or finished goods or cost of sales, that is you are recovering from whom? Customer. Okay. Even if you transfer to work in progress or finished good account or cost of sales account, you are recovering from whom? Customer. Now you said me you should transfer to work in progress account. Why? Factory. Where do we produce finished goods? Okay. So the same, even that will also be produced in a factory. Any more answer? Uh, okay. So we should link our cost sheet. We have a clue only in our cost sheet. Okay, what she said is right, but I'm saying that not all work units, even finished will also be produced in a factory. But at what stage we should add has been explained in the cost sheet. That is the reason I have done cost sheet. Factory overheads is part of which cost? Work in progress. So direct material, direct labor, direct expense, and factories. So in work in progress valuation, we should include or we will include what? Factory overheads. So therefore, whenever a question is said factory absorbed, we transfer to which account? Work in progress account. Next overhead. What is the next overhead? Administration. The same situation comes for administration. Administration absorbed means transfer to which account? We transfer it to finished goods. Next overhead, selling and distribution overhead. Selling and distribution not absorbed included cost of sales. So these are the accounts we have opened. Work in progress, finished goods, cost of sales. So factory overheads will form part of work in progress. Administration form part of finished goods. Selling and distribution form part of cost of sales. Where to include has been clearly explained in cost sheet. Now that we are doing it. Now, factor absorbed means from factored transfer to work in progress. Now, what will be your entry? Work in progress control account data to factory overheads control account. Let us write 40,000. In factory we write what? By work in progress control account 40,000. This entry for what? Factory overheads recovered or factory overhead absorbed. Right, that 16th entry. Factory overheads absorbed. Entries work in progress control account at R2, factory overheads control account. Work in progress control account at R2, factory overheads control account. Forget about amounts, write entry. Next, let us close with these factory overheads has been closed. Let us close administration overheads. Administration of total debits is 40,000. I said that administration overheads absorbed. He said that administration overhead absorbed. Therefore, from administration overhead, we transfer it to finished goods. So therefore, it will be finished goods control account debtor to administration overhead control account. That is entry for what? Administration overhead absorbed. Finished goods control account debtor to administration overheads control account. He said that administration absorbed is 30,000. He had given in the question how much? 30,000. Therefore, I am writing in administration overhead by finished goods control account 30,000. Now there is an issue here. What issue we have? We have a balancing figure. So debit side total is how much? 40,000. Whereas recovered is how much? 30,000. We have balance amount of how much? 10,000. Now, where to transfer? We can discuss it later. First of all, what is the 10,000? Huh? Under recovery or over recovery? What is the 10,000? Under recovery or over recovery? Under or over? Okay. How many are saying over recovery? Okay. How many are saying under recovery? Okay. How can you say it is an under recovery? Incurred? 40,000 is incurred. Okay. Then 30,000 is recovered. Yes or no? Yes or no? Okay. That is yes. So therefore, debit side, whatever we have written is nothing but the cost that has been incurred. So debit side we write what? Incurred amount. Whereas credit side, over its credit side, we'll be writing what? Recovered amount. For factored, such a doubt has been erased because I took total amount. Whereas administration, we are trying to find out new item. So credit side, we have recovered 30,000. We have incurred 40,000, whereas we have charged to customer only 30,000. Therefore, we have what? Under recovery. So therefore, 10,000 is under recovery. Okay. First conclusion, that is under recovery. Next, where should we transfer it? How or why? So you cannot say directly cost in P&L account. Now you should say that overhead under or over recovery. We had total of 5 methods or 6 methods. 3 methods. Use of supplementary rate, carry forward method, and charge it to costing P&L account. Here, use of supplementary rate related questions will not be asked. He will not ask. He will not say anything. Therefore, we will not solve a question by using one supplementary rate, because by using supplementary rate, we should pass number of other entries also. So therefore, examination point of view, he will not ask that. So therefore, we will go with other two methods. One is carry forward, other one is charge to costing P&L. If you follow with carry forward method, what happens? We write by balance carry down. If you follow a method of carry forward, by balance carry down. If we charge it to costing P&L account, we write what? By costing P&L account. Now, for what we will be having entry? For carry forward, there is no entry. We just balancing figure. If we are transferring it to here, costing P&L account, we will be having an entry. What costing P&L account data to administration overhead control account. If it is of what? Under recovery. So costing P&L account to administration. Here, I'm not taking it as a not transferring it to costing P&L account, or let me transfer to cost P&L account for your understanding. So by costing P&L account, what is it? Under recovery or over recovery? Under recovery. So by costing P&L account 10,000 under recovery. Now entry is what? Costing P&L account data to administration overhead control account 10,000. So this entry for administration overhead under recovered. Administration overhead under recovered. Entry is costing P&L account data to administration overhead control account. If we carry forward, there is no entry for it. Now, coming to selling and distribution overheads control account. Total of debits is 40,000. Now, let us write first of all recovered entry. Selling and distribution overheads recovered entry will be cost of sales control account to selling and distribution overheads control. Right there. Selling and distribution overheads recovered. Entry is cost of sales control account data to selling and distribution overhead control account. I am taking here 50,000. In question, let me take, they are given as selling and distribution absorbed or recovered is how much? 50,000. Therefore, I have written by cost of sales 50,000 in selling and distribution or control account. Now tell me, we have incurred how much? 40,000. We have recovered how much? 50,000. Now we have over recovery. So let me close that account. 50,000. 10,000 is what? Over recovery. Now what we can write? To costing meal account to balance carried on. You can, for the previous one, since you have written costing meal account, for this you cannot write carry down. You should what? Company follows either carry forward or they follow with what? Costing meal account. For some accounts carry forward, some accounts costing meal account, they will not follow. Uniform, they follow same thing. So for previous one, we have transferred to costing meal account. Now also let's transfer to where? Costing P&L account. Now 10,000 is over recovery and hence we are transferring it to costing P&L account. Now tell me, what is the entry for over recovery of overheads? Selling and distribution overheads control account data to costing P&L account. Right that. Selling and distribution overheads over recovered. Selling and distribution overhead over recovered. Selling and distribution overhead control account data to costing P&L account. Selling and distribution overheads control account data to costing P&L account. Now, with this we have closed from wages till selling and distribution overheads. From wages we have closed till selling and distribution overheads. Now let us start closing from stores. Stores total debits is 1,10,000. For this no entry, just listen. 1,10,000. Now total of credits is how much? 80,000. 1,10,000 minus 80,000. What is it? Closing stock of raw materials. So by balance carried on 30,000. Closing stock of raw materials. Next, similarly for work in progress. Total of debits is 1,80,000. 1,80,000. Now, here we have set an entry. There is no credit entry here. Now we should discuss here. Finished goods produced. First, tell me what is impact. Finished goods produced means from where it will convert into finished goods. First, we had seen raw material issued to production means raw material it is converting into what? Work in progress. Now, finished goods produced means from work in progress, it will be transferred to what? Finished good. Now, what is entry? Finished goods control account data to work in progress control account. This entry for what? Finished goods produced. Right there. Finished goods produced. Entry. Finished goods control account data to work in progress control account. Finished goods control account data to work in progress control account. That is entry for finished goods produced. Now in work in progress, I wrote credit side 1,50,000. Total debits is 1,80,000. In that 1,50,000 has been transferred. That is finished goods has been converted. We have balance of how much? 30,000. What is it? Closing stock of work in progress by balance carried down. Next, similarly, finished goods total debit is 2,10,000. Now, they'll say that finished goods sold at cost, not sales. Finished goods sold at cost. Because till here, we have adjusted only administration. Up to finished good account, if you see, we are in what? Administration. We have one more cost to be added before making sale. That is selling and distribution. So therefore, that should be added and then we make sale. So finished goods sold at cost means from which account to it will transfer to which account? From finished goods, it will transfer to where? Cost of sales. Now tell me, finished goods sold at cost entry. Cost of sales control account data to finished goods control account. Write that. Finished goods sold at cost. Cost of sales control account data to finished goods control account. I took some 1,80,000. Entries cost of sales control account data to finished goods control account. Now in finished goods we have balancing figure of how much? 30,000. What is it? Now closing stock of finished goods by balance carried on 30,000. Closing stock of finished goods. Now with this raw material work in progress and finished goods has been closed. Now let us go to cost of sales. Total debits is 2,30,000. Now for cost of sales, in cost sheet, imagine cost sheet, for cost of sales we'll be adding what? Profit or loss, we'll be getting what? Sales. So in order to calculate profit, we must know cost of sales, we must know sales, the difference is what? Profit. So in order to calculate profit, cost of sales should be transferred to costing P&L account. By transferring the cost to costing P&L account, we'll be getting which value? Profit value. So cost of sales entry is cost of sales entry is costing P&L account to cost of sales. That means this cost of sales will be transferred to which account? Costing P&L account. So costing P&L account to cost of sales control account. In our case, it is 2,30,000. So that is entry for cost of sales. Costing P&L account to cost of sales control account. Now here before closing it, let me open an account called as well sales account. Now, generally what is entry for sales? Okay, cash or debtors account data to sales. Now, cash or debtors should be open or not? No. So therefore, entry will be GLA account data to sales. Write that entry. Sales, GLA account data to sales account. GLA account data to sales account. Let me take here some 2,50,000. I took 2,50,000 as sales value. Now, in financial accounting, where do we write the sales value? Under any account. Why? In order to calculate our profit or loss. So here we don't have an account costing P and L account. Now the sales will be transferred to which account? Costing P and L account. Therefore, it will be sales to costing P and L account. You can write this as transfer entry for sales. So sales to costing P and L account. In costing P and L account, I am writing by sales account 2,50,000. So I'm writing here 2,50,000 in costing P and L account. Now, debit side we have cost. Cost of sales is 2,30,000. Forget about administration, selling, and distribution already. Forget about this. So debit side is what? Cost of sales. Credit side is what? Sales. Difference will be profit or loss. Here we have profit. Total of credits is 2,60,000 minus total of debits. We have a profit of 20,000. So this is our profit. Now, this profit, what we should do? We transfer it to GLA account. This is our profit. So finally, the profit will be transferred to which account? GLA account. We don't want any profit account or no information of profit should be shown there. So therefore, entry for profit is what? Costing P and L account that are to GLA account. If it is loss, GLA account that are to costing P and L. Here we have got profit. So therefore, profit entry is costing P and L account that are to GLA account. Now in GLA account, let me write by costing P and L account 20,000. So the 20,000 I have written in GL account. Now let me make total of GL account. 3,30,000. Now balance amount is 80,000 to balance carry down. Just like GLA we have opening balance. Now we have a closing balance of how much? 80,000. So that is our closing balance of what? GLA. Now they ask us to prepare trial balance. Opening 60,000 I have explained you. How do we got the 60,000? 10,000, 20,000, 30,000 we have added. Now we have closing 80,000. I want to prepare trial balance. So I'll be adding closing balances 30,000, 30,000 and same is 90 and 30. Is there any calculation mistake we have done? Neither. Okay, let's leave it. Generally it will match. Maybe I think some error we have done. Forget about calculation. Generally, if we make an addition of these three balances, we should get how much? Same amount of GLA. I think some error we have some point somewhere. Leave it. Now, if we ask us trial balance to prepare closing trial balance, we prepare, or we close all those accounts and we make a sum of order, it must be tallied with what? GLA account. Okay. Now, these are entries that we generally pass for a normal question. So first set of entries, stores, work in progress, finished goods. And after that, we have tried to, stores, raw material, work in progress, raw material, wages and expenses. Expenses. We have passed material for that is material, labor, and expenses. And after that, passing those entries, then we have discussed each set of entries, 50 entries. And after that, we have started closing from wages till selling and distribution order. In this process, we learned entries for under recovery or over recovery of overheads. And after that, we have closing or we have started closing our entries starting from stores to GLA. And the stores will be having some closing balances. And in this stage, we have learned some entries like finished goods produced, finished goods sold at cost, and cost of sales. And finally, we got profit or loss, and that has been transferred to a GLA account. So this is what we have finally. These are the set of entries that in case of we should prepare what non-integrated books of accounts, and understand that this books of accounts is as books, cost books, cost books. So simultaneously we should prepare financial books. Then we'll be opening all accounts, tax account, tax account, local. But you know that is what we are not discussing. Here we are learning only about what books of accounts that are required to maintain as well cost account. Now finally, what we have done is that we have prepared the same cost sheet, but the cost sheet has been prepared in the form of accounts. We have prepared the same cost sheet, but we have prepared in the form of what? Accounts. That is what we have seen here. Now, let us see. What is this 50,000 written here? In work in progress, if an amount reaches, raw material has been reached, what is that raw material? Direct material or indirect material? So this 50,000 is what? Direct material. Next, what is this 50,000? Direct wages. What is this 20,000? So direct material plus direct labor plus direct expenses. We call it as prime cost. For prime cost, we should add factory overheads. So how much is our factory overheads? 40,000. We have added. We call it as gross works cost. For that, we should add. So opening work in progress is 20,000. So till here we got a gross works cost plus opening work in progress minus closing work in progress. So total of 1,80,000 minus 30, that is 1,50,000. So minus closing work in progress, we call it as net works cost. So therefore this 1,50,000 is what? Net works cost. So we have written net works cost here, 1,50,000. For net works cost, we should add administration overheads. How much here? 30,000. So net works cost plus administration overhead, we call it as cost of production. For cost of production, we should add opening stock of finished goods. We should deduct closing stock of finished goods. We arrive at cost of goods sold, 1,80,000. Don't see this word, okay? And cost sheet we have written is what? Cost of goods sold. So this 1,80,000 is cost of goods sold. For that, we should add selling and distribution overheads. We arrive at cost of sales. So for cost of sales, we add profit or loss. We'll be arriving at sales. The same cost sheet we have represented in the form of what? A cost. So therefore, you can say sum of work in progress plus finished goods plus cost of sales plus costing P&L account is equal to cost sheet. So that representation we are doing in the form of that is what we have till now. Next, why other accounts have not been opened means we said in cost sheet we doesn't require debtors account, creditors account, cash balance, line and billing, plan commission, etc. All those items are not required for what? Cost account. So that means GL is nothing but we have opened for those accounts which we don't require as per cost accounting. So those accounts have been removed and we have opened an account called as GLA. So if you understand that point, that is sufficient. Now these are the entries that we pass in case of cost accounting, and we have started with what? Integrated or non-integrated? Non-integrated. So cost book separately and finance book separately, that will be. So this is overall introduction relating to non-integrated books of accounts. So I have written, I made you to write entries because now you may understand, but while having revision during examination, you should understand these particular entries. So if you write this ledger, you will not be having clarity what you have written. Like a rough working or something you written, and you will spend some people try to understand these. They'll spend hours of time to understand, trying to understand. You cannot understand after closing those particular ledgers. So that is the reason I made it to the part only in this. Okay. So we have linked with our element wise classification and we have linked our cost sheet. And this is all about non-integrated books of records related adjustments. And you have entries in your textbook. You can see that in that even you have some other entries to be learned that we will discuss when we start with problems. The time being, what are the entries that we made in the notebook that is sufficient to refer. So while you refer those points that are sufficient.